Hello, everybody. This is Noah Rosenblatt. I am with UrbanDigs, and today I want to talk to you about a couple of different ideas. One idea I want to talk to you about on the listing side, which is all those RLS updates from all those professional agents across New York City, putting it into one database. I want to track what I think is going to be the three phases of the listing side, which will be phase one, destruction of activity, phase two, normalization and bottoming of activity, and stage three is going to be the recovery of activity. That's one thing I want to cover. And then I want to end with my price action reverse checkmark theory or idea that I'm going to put forth, which is the pattern that I expect Manhattan price action to follow. And when that is going to come. So let's just get right into this. First, on the listing side, we can track new listings, we can track new deal activity. Those are the two things we can track in real time. And when I look at both of those, I see a destruction of activity pretty much starting in mid-March, going into April, and now we're starting to see a little bit of a tick up. Now here is contract signed, weekly contract signed. So you could see what I'm talking about when we have phase one, destruction of activity. That has pretty much been the last 7 or 8 weeks. We're in the process right now of transitioning to phase two, which will be normalizing and finding a bottom. Ultimately, that's going to lead to phase three, which is the recovery of activity, which I don't think is going to really kick in until obviously the no showings order gets lifted. Hopefully that is going to be in sometime in June. So this is contract signed activity, and you can clearly see it, a big fall. And now we're about to enter that part where we're trying to find the bottom. Okay, so now I'm going to switch this to new listings, and we're looking at week to week new listing activity, and you can see the same thing. Here's the destruction of activity. We've already been through that phase. We're a good 6-7 weeks into it. And for the last 3 weeks or so, we've been ticking back up in terms of new listing inventory. So I think new listing inventory is starting to see a bit of a bottom formation, and if not a beginning of a recovery. It could be in the very early stages. It's only a couple of weeks. It's too long to tell if that's a trend. But regardless, that is what that chart is showing. So now let's combine those two. So now the green line is showing me contract activity and the bars are showing me new listings, and you can see that both of them are completely being destroyed. Okay, so that's what I'm talking about, the phase one destruction of activity. It was this market adapting to a no showings order. We're now getting into the part of the process where most of the contracts being signed are probably sight unseen deals. I'm sure there are some legacy deals, residual deals that the buyer has seen the property from before COVID started. But we're getting to that point a few months in right now where it's mostly sight unseen deals. And this is where we're going to probably bottom. So this is where I am looking for a recovery. Okay, now let's get to the interesting stuff. Here is a monthly look at closed sales volume, monthly closed sales. And I did 1 year here. I did 3 years here, but I want you to focus on 1 year. I want you to focus on 2019. And if you look at most of these bars, especially for July, August, and September, they're just under 1,000. Okay, just under 1,000. So we normally on a monthly level are going to see about 1,000 listings close as we get into the late summer and fall. Now, the reason I'm bringing that up is because we're going to go to a period of time where we only have about 400 contracts, 500 contracts from COVID, which was down significantly from this period last year. And that is ultimately going to fuel and populate the sales volume as we go into July, August, and September. If there's not thousands of listings being put into contract, that pipeline for the future sales volume is going to go down, down, down. So at the end of the day, I expect July, August, September to mark the high illiquidity of today's marketplace. The fact that so few deals are being signed, we're going to see a big move down when we get down to these charts in sales volume, July, August, and September. And think about the price action. Think about the prices, the price per square foot, the median sale price that these months are going to show with such little volume. So now, if you ask me, if I look at the last 30 days of closings, okay, the last 30 days of Acris, New York City filed and registered verified closings in Manhattan, what period of time are those representative in terms of when they were contract signed? And when I look at that, this is the chart that I see. And what I'm seeing here is I'm seeing, all right, sales coming in over the last month is really reflective of deals signed in January and getting into February, okay? I do see a couple of in early March over here, but obviously not that many. So if I were to even this out, it would probably be somewhere around late January early February, if we would even this whole thing out. So if you think about it, our sales pipeline right now is showing deals signed from late January and early February on average, somewhere around that time period. If March 20th was our no showings order, we're still about 6, 7, 8 weeks away from really showing those COVID deals. So this is a little way of me seeing what period of time the sales are reflecting and what that lag is. So in short, this is telling me you got to wait. You got to wait about 6, 8 weeks for pure COVID deals to start coming in. And that's going to only be the beginning of it. That's going to begin a whole phase of March, April, and May contracts being signed, ultimately closing. Probably July, August, and September is when you're going to see that. Now, my reverse checkmark price action theory. What I think is going to happen is you have a couple of months of good sales in the pipeline still to funnel through. So right now, I only have January and February confirmed. Okay, that's why they're in blue. The rest is estimated. Very important that you know. These are estimated median sale price bars. This is a figment of Noah Rosenblatt's imagination here to explain what I think is going to happen. I think we have another couple of months of decent sales in the pipeline, March, April, and May, sales that have to file in from Acris that is representative of the market back in December, January, and February, okay? That's pre-COVID. I still think we have decent numbers to come in. After that, we're going to get into that period, June, July, August, September. We're going to get into that period where it's going to start to reflect the slowdown, and it's going to start to reflect the fact that we have so little sales volume. So these months, July, August, September, are going to ultimately have very little sales to populate the median sales price and the price per square foot trends. I expect a big, sharp move down, almost like a fall off a cliff. That's the reverse check mark, that first half where it's coming down. And then I think it's going to have a quick bounce back and a quick recovery. But that recovery is only going to retrace about half of where we started from. Ultimately, I think this is going to take a year or so to get back to the levels that we were at before this all started. How much are we down? That is a $1 million question. We're getting ranges from down 5% to down 25%. I'm sure you're going to hear extreme discount deals of down 30% in some sectors where sellers had to sell. But on average, on median, I'm sure it's going to be somewhere around the 10 to 15% mark when all is said and done. And of course, that'll be on the high side for the upper price points, and that'll be on the lower end for the lower price points and the co-ops resale sector. All right. This is Noah Rosenblatt. This is my reverse checkmark price pattern theory expectation for what we're going to go through. I think we're going to see the worst of it come first. It's probably going to be in July and August, give or take a month or two. You could push back these numbers. And then again, I think we're going to bounce back a little bit, and we're going to see a gradual recovery that might take a year to get us to this time next year, to get us to pre-COVID levels. Thank you very much for your time. I hope everyone stays very safe and well out there. This is Noah Rosenblatt from UrbanDigs, and I'll catch you next time.